Welcome to the Tech Talks Daily Podcast, where you can learn and be inspired by real-world examples of how technology is transforming businesses and reshaping industries in a language everyone can understand. Here is your host, Neil C. Hughes.
Welcome back to the Tech Talks Daily Podcast. Now, we have listeners in 165 countries to this show. And I know that in some of those countries, like the UK, where I'm talking to you today, there are many people that take things for granted. Little things like having their own home, bank account, and even access to a financial credit score, which allows them to secure credit when they need it. But there are billions of people around the world that don't have access to any of those things. And in the US and UK, I know there are millions of people who do not have access to credit. So how do you solve that problem? How do you help people build a credit profile so they can eventually go on to buy their own home, for example? Well, a company called Kashable is using technology to offer socially responsible financing to employees as an employer-sponsored voluntary benefit. And they're using innovative technology to improve the financial well-being of working America with a commitment to both reliability and affordability. So essentially, it's a kind of socially responsible financing solution for employees. It's offered as an employee-sponsored perk. But how does it all work? And what's the story behind the company? Well, I tracked down Rishi Kumar in New York City, and I invited him to come on the podcast today and tell me all about it. And thankfully, he said yes. So buckle up and hold on tight as I beam your ears all the way to New York, where Rishi is waiting to share his story today. So a massive warm welcome to the show. You're an engineer, an innovator, and a serial entrepreneur who's built a career creating value at the nexus of technology and finance. But can you tell us how you got here? Share your origin story and where your passion for tech came from.
Sure. Thank you, Neil. Well, if you go back long enough, I started out in India. I'm from a small town there, steel and auto town, and I came to the U.S. on a scholarship to MIT. I was the first kid from my town to make it there, and I majored in computer science and finance, and I did my graduate school there too. Graduated with some loans, so I wound up taking my first job on Wall Street to take care of that. And I was a bond derivatives trader to start. And a few years in, I realized that shuffling money isn't really my calling, but I wanted to go out and be an entrepreneur instead. So I started my first company then, and now I'm on to this one, Cashable.
And you said shuffling money's not your thing, but as you said, that path ironically led you to Cashable, which is known for deploying innovative technology to offer immediate access to low-cost credit. But can you set the scene and tell me a little bit more about how your tech and also about the problems you set out to solve with Cashable too?
Sure. I've always had a passion for technology. I was writing code since I was 10 years old. And back then I didn't even have a computer. So I aspired to go to an MIT, but I hadn't owned a computer till I got there. But I used to write my code on paper and then have a couple of hours at a shared terminal at school to tap it away and make something happen. But back then when I didn't have a game to play, I'd write my own game. And I always saw technology as a sort of a democratizing force. Enabling anyone really with an idea that they've conceived to be able to realize it and to be a change maker, without being landed gentry or anything like that. And in my own story, my co-founder here, Inath, like myself as an immigrant as well. And we both came here going to good schools and with bright futures ahead of us, high-paying jobs ahead of us. But just by virtue of the fact that we hadn't grown up here, we didn't have any credit history to speak of. And every little step, like leasing an apartment, a car, or even getting a postpaid phone plan, everything requires that. And just like ourselves, there are many people that don't necessarily have that rich credit report. And it's not because they're badly behaved. Many times it's like us, it's a function of circumstance. And just statistically in America, 2/3 plus of people at all income levels live paycheck to paycheck. And in working class Americas of people with jobs that are employees, more than half of them are non-prime credit. So, the Bank of Americas, the Goldman Marcuses of the world, even the SoFis in the fintech ecosystem just wouldn't be in a place where they want to service them or be able to extend credit to them. And we set out to say, how do we serve this class of American and be able to solve for all people across all credit brackets and income brackets? And that's how we came up with Kashable, to be able to offer a financial wellness platform that's offered as an employee benefit through employers, much like health insurance or retirement plans are, where we can leverage employment-based data in that loan underwriting and then get repaid through payroll to reduce our default risk. And then all of the savings that come to us from those processes, we can turn back around into lower cost loans for people. And maybe even more importantly, we can say yes to a lot more people that other lenders might deny. And along the way, we also provide ancillary services like free credit monitoring, financial coaching, financial literacy resources, so people can just have a path to being more fiscally responsible.
It's such a great point you raised there, because I know there's people, especially well-off people here in the UK and in the US, that may look at other countries with social credit scores and say, this is outrageous. How can you live life like that? But of course, in both of our countries here, there is this financial score. And if you've not got access to that, you're locked out of everything, aren't you? Locked out of the game.
That's absolutely true. And one of the things we do is allow people an entry point into the financial system. We're not going to be the be-all, end-all resources for everything that a person needs, but we approve people even without credit scores, and we report on their payment history, which, because it's getting repaid through payroll, is often good and therefore results in better reporting. So 80% of the people that we have approved for loans that never had any credit have a credit profile by the end of their relationship with us. 60+% of people that borrow from us see an improvement in their credit scores by the end of their relationship with us. And what that means is that this now will hopefully enable them to go on to taking more meaningful financial decisions in their life, like being able to buy a house, get a mortgage, all of these things. A lot of the wealth creation in America really happens through home equity and retirement plans. So to the extent that we can keep people from rating their retirement plans and loans, like a quarter to a third of Americans borrow or have a loan against their retirement plan any given day. That's how much that is the case, which kind of means that they're not building their nest egg. They're being shut off from that wealth creation engine. And it's the same for home buying and home equity. There's a whole class of people, because of their credit scores, that are not able to secure that mortgage and hence not build wealth through home equity.
And it's such an important story to share. And when I was doing a bit of research on you before you came on today, I read that you're very passionate, and that passion comes across today, about wanting your tech startup and technology to help minorities reach that financial wellness. Can you expand on that? Is that something that's been important to you right from the outset?
Sure. I'll say that passion, my passion and my co-founder's passion as well, is to help the underserved, and to be able to do it in a race neutral manner, in all honesty. But what happens is that wealth and access to financial resources, credit scores, are all correlated highly with race. So to the extent that we try to serve the underserved, it de facto winds up being that we also provide a mechanism for uplifting minority communities that have historically been marginalized as it relates to access to credit, access to banking, and such. So, we don't do anything that's very special to encourage minorities per se, but just by not separating them out, all of our advertising, our literature, everything is inclusive. Is race neutral. Our ad targeting is geographically race neutral. All of that gives us a population of loan applicants and borrowers that is almost half minority, without having to do anything special. That just goes to tell you that if you can be inclusive in your approach, have a diversity of voices, people that are doing your outreach, then you can serve that community better already.
And when I was researching, I also read that I think you secured $100 million in credit facility. So can you tell me more about that and how that essentially will help accelerate Cashable's ability to provide social or socially responsible credit to consumers?
Yeah, absolutely. One of the things that we want to do that we, again, for the same class of underserved borrowers, users, what have you, is that not only do they not have great access, but often they're not treated well by bigger institutions as well. So for us, one big aspect of how we run our business, how we design our user interface, how we train our team that interacts with these users is to be able to have an empathetic approach to our end user and be able to understand where they're coming from. And a part of that for us is to be able to control the whole user journey from beginning to end and be fully vertically integrated in the delivery of our services. So we do everything as it relates to, for example, the loans that we provide, from transacting on our platform, originating the loans, to servicing them, funding them, and then owning them on our balance sheet throughout the lifetime of the loan. And then basically that implies that we have to have a balance sheet that can support the size of borrowing we do. So just to put that in context, today, our business serves some 250 employers in the US that represent nearly 3 million employees. We have hundreds of thousands of signed up users. We have 50, 100,000 open loans any given day, which even at the sizes that we make them, mean that we originate, several $100 million of paper every year, a lot of which sits on our balance sheet. So, and hence having this sort of backing from our lenders available to us helps us deliver this to our users.
And as this is a tech podcast, I'm going to have to take a peek behind the curtain or look under the hood and ask you, can you tell me more about the tech that makes all this possible?
Sure. So the innovation in our business is twofold. One is in the conception of how we approach this market. So, and then the second is around the technology. So the first part of that is, how do you underwrite risk for this person that doesn't have a great credit score or a very rich credit history and hasn't been part of the mainstream financial system? And historically, some people have tried to do that by, for example, in some other countries, by looking at people's mobile feeds or, Twitter feeds, Facebook feeds. And it's not always obvious that those should be correlated with credit performance. But one thing that is that a person's income stream and their employment most certainly is correlated. So the first step in our decisioning was to be able to approach this problem a little bit like health insurers or life insurers do in America, meaning if you have group health insurance from your employer, it tends to be a lot cheaper than anything you can buy in the open market by yourself, because that insurer is able to look at the profile of the group and underwrite it as a group and say that, hey, I'm not going to have a lot of adverse selection, meaning I'm not just going to get the diabetics and the heart patients signing up for my health insurance, and therefore I'm going to be able to price this better. And we take a similar approach because it's a tried and tested approach that's worked for decades for that industry. And lending is a lot like insurance in that we clip a coupon and we take life event risk that something will happen in our borrower's life that may make them unable to pay us back. So taking that approach of group-based underwriting, saying that, hey, you may not have a great, rich credit file, but you work at a government employer, you're a hospital nurse, you're a postal worker, you work at a ship, there's any number of these types of jobs that we service where these people, we know they're earning an honest wage, they'll keep that job for a while, and to be able to underwrite that. So being able to address those data points and create an algorithm around that. That was one big change in how we think about the lending universe that enables us to do this. And then the other big part is around the execution which is that it means that we need to build now pipes into a number of these employers, HR systems, payroll systems, and be able to bring in all these data sets and combine them with publicly available data from bureaus, et cetera, to be able to deliver the experience.
And I would imagine we've got a business leader listening to our conversation today, located anywhere in the world, and they'll be thinking, this is a great perk to add to my employees. Mm-hmm. And then they'll go into the office the next day and say, I think we need to do something about this. And the IT director will say, but how does it work? What do we need to do? What servers do we need? All that kind of stuff. So can you just walk me through what a business essentially needs to get up and running and offer these services?
Yeah, it's very similar to how they might offer health insurance or other voluntary benefits. Yeah, many of them offer, pet insurance, gym memberships, what have you, to their employees. And our entry point in the employer is very similar, and we're integrated onto all of the top employee benefit broker platforms or benefit administration systems, payroll systems. So if you're using, let's say, a Workday, or your broker is a Mercer or an Alight, then there's a good chance we already have an integration built out that you can use and be up and running in short order, delivering your data about your employees into our system. And then on the flip side, being able to ingest data about who's taking a loan and whose payroll needs to be deducted. And it's a very similar process. So, that's a good part of what we've been building over the last few years. So depending on exactly what systems people use, they can be up and running in a matter of weeks.
And I'm curious, as the ex-IT guy, what have been your biggest technical challenges along the way? Was it building those integrations you just talked about, or was it something completely different?
Yeah, sure. I mean, that's definitely a challenge. Unlike many systems where, when people want to integrate for banking, there might be a wrapper service like a Plaid or something that allows you like a single point of integration into many systems. But the benefits, payroll, HR system community is very, very fragmented. There are dozens of actors. Many companies use legacy systems, ERP systems from decades ago that are still running their HRIS or payroll, and solving for all the nuances of that and being able to deliver something that is that can be implemented easily. HR departments that are tasked with tending to the flock at all these employers are often, they're amazing people. They're very empathetic with their teams. They know what the needs of the teams are. But at the end of the day, they're often treated like cost centers in their organizations and are often under-resourced from a technology or IT staffing perspective. So getting them to the point where they can pull the trigger on this and put this on their implementation and integration pipeline, that's been the biggest challenge. There's a lot of inertia there, and getting the HR teams everything they need to be able to deliver this.
And as a startup founder that's making a difference with technology, and there are going to be a lot of people inspired by listening to your story today, and they might be much earlier on their journey. So what would you say the biggest lessons you've learned along the way are?
Sure. I mean, I think for me, there's been two big things. One is that, there's a lot of people that look on from the outside and they see the success stories and the wins. There's a lot of survivorship bias in the headlines, So I always tell people that they're about to set out on the journey that there's a lot more grit than there's glory. People see the people on top of the mountain, but they had to do a lot of climbing to get there. And you have to be the kind of person that can relish the climb and not just the one that wants to plant the flag at the peak. And that's been a good thing for me. And what's helped me to feel that way is to have mission orientation. The pursuit of wealth alone is not enough to keep you going through the roller coaster that startup life often is, and the grit that it is. So believing in what we do and why we are here, and being able to remind myself of that has been one big thing for me to get through the tough times. And then the other thing for me that I've always found that has helped me is that a lot of startup life is such that no matter how much effort you put in, the outcomes can be erratic. It could be the market volatility that we're seeing today, or any number of other vagaries of the system that are swaying your outcomes. And there's not always a correlation between effort and outcome. And that can be tough to handle or frustrating. And I like to balance out my work life with keeping up some other personal pursuits where effort is correlated to outcome. So for example, for me, that's a pursuit of, fitness goals or sports goals or language learning or something like that, where I know the more effort I put in, the better my Mandarin will be, as an example.
Oh, I absolutely love that. It's such a powerful message behind that story too. But of course, I'm sure you've had a few interesting stories or even funny stories along the way as well. Is there anything that stands out there?
For the startup journey itself, I think more than funny, I think I've always been inspired by how much faith people have.
Yeah.
I came to America with not a whole lot, and there have been so many people that I've helped along the way when they didn't need to or didn't have necessarily a foundation for that belief. But I feel like this is a country that respects hard work, ideas, that mission orientation. And I see the same in all the people in my team. There are sometimes I see haters of the millennial generation and this, that, and the other. But I'll tell you that when I look at that generation in my team versus how my generation was decisioning. When I graduated MIT, in a class of 1,000 engineers, more than half went to work in finance and consulting. Yeah, these were all engineers trained by the top engineering school in the country, and that was still the path they chose. And when I look at the people on my team, and I'm just amazed by how many of them are choosing a different path and saying that it's more important to me to make a difference in life, and how much belief there is in the system today that we can do well while still doing good.
100% with you on that. And as for Cashable, what's your grand vision for Cashable now? Where do you go from here?
My hope is that just like employers in the U.S. for many decades have sort of taken on the mantle of being responsible for the health of their employees, they've become the primary provider of health insurance as a safety net, for example, and other types of health-oriented insurances by saying this is the best mechanism for delivery of that. It can't be the government. It has to be this. My hope is that they are, and I think they're already starting to, that they'll understand that taking up the mantle of financial wellness is similar, and that this is the best mode of delivery. They are at this unique position where they can make that change, where they can offer a safety net, like a Kashable. Right now we are among a few companies that are in the space that can offer this. So I would think that a few decades down the line, that financial wellness has a similar seat at the table among employers and employees as what health has today.
Wow, what a great moment to end on. And before I let you go, though, we began talking about your origin story. We've kind of come full circle now. So I'm going to ask you to leave everyone listening with a personal note of inspiration. So can you share your favourite song that we'll put on our Spotify playlist, or a book that has inspired you and we'll add to our Amazon wish list? What would you like to leave everyone with?
Sure. I'd say that maybe I'll go with the book for that. Yeah. Then. One book that I like a lot is Thinking Fast and Slow by Dan Kahneman. I don't know if you've heard of it, but he's a behavioral psychologist, and I'd studied some of his work when studying behavioral finance back in school. But he talks about how our decisioning systems in our brain have sort of a fast, heuristic-based quick decision maker, and then another more analytical, slower thinking process, and how we all can have a lot of cognitive biases because of how these heuristics are set up. And I think it's a phenomenal read and a good exercise in self-awareness and how so many of us make irrational decisions and jump to quick conclusions because of these decisioning systems that might have served a good evolutionary purpose at some point, but may bias our decision making now.
Wow, brilliant. I'm going to be checking that book out for sure. I can promise you that. And I'll add it to the Amazon wish list for everyone listening. And for anyone just wanting to find out more information about Kashable, maybe look at some use cases, etc., or contact your team, what's the best place to start?
Well, our website, Kashable.com, and that's with the K, so Kashable.com is the best resource to start.
Well, I love what you're doing here. I always say at the end of every episode, technology works best when it brings people together. And you've raised a very important issue of people that can't get on that financial credit score and that financial credit ladder. And we've spoke to a lot of people in the past as well about people that don't have bank accounts and how technology is helping bank the unbanked. And these are things that a lot of people take for granted. So thank you so much for sharing your story and a solution to this very real problem out there.
Well, thank you so much for having me, Neil.
I record 10 episodes a week of this podcast, and every now and again, a guest comes on, and from the moment that their video comes on that Zoom call, they've got a big beaming smile, they've got just loads of energy and positivity about them. And Rishi was one of those guys, just an incredibly cool guy, a great backstory, and a passion to use technology to make a difference. And I love his backstory of how he combined his engineering techniques in analysing big data with cutting-edge financing and underwriting to then go on and create a cloud-based solution that makes instant access to affordable on-demand credit. But of course, that's all the tech side of it and the business side of it. But it was none of that brought his story to life today. It was that passion to make a difference to employees' lives and allowing businesses to then make a difference and offer a service like this to their employees as a perk or benefit. So I hope you learned as much as I did today. It certainly made me not want to take things for granted that I have access to, but also feel assured that there are people like Rishi making a difference with technology out there. And if this technology has impacted you or your workplace, if you've seen or heard the difference that it can make, or maybe a similar solution, whatever it is, I'd love to hear about it. Please email me, techblogwriter@outlook.com. If you'd like to come on here and share your story, again, techblogwriter@outlook.com. Twitter, Instagram, LinkedIn @Neil C. Hughes, and we'll keep this conversation going. So today was all about using technology to help people that don't have access to a financial credit score to not only secure credit, but improve their credit throughout their working career. But where do we go from here? What are we going to talk about tomorrow? Well, regular listeners will know this is the point where I spin the wheel of fortune, and where it stops will determine what topic we go after tomorrow. But I'm not going to tell you where it stops. For that, my friends, you're going to have to join me bright and early tomorrow. You'll find me mooching around in your podcast feeds. Hopefully you'll join me again. But a big thank you for listening. And until next time, don't be a stranger.
Thank you for listening to the Tech Talks Daily Podcast with Neil C. Hughes. Remember, technology works best when it brings people together.